I like him too. I think he's as smart as anyone that there is. And I just think he antagonizes this side of the table. And instead, it would make not only people's portfolios stronger to have both, if you believe in a digital form of investment like this, it would make your portfolio stronger to have an analog aspect to it. But not only that, it would make your understanding of monetary history, of economics stronger as well. And so I just think I've tried for the last 2 years to unite, 3 years to unite these two communities. And I admittingly don't know enough about crypto to even be halfway literate about it. But I do know enough to know that we see the world mainly in the same way. And like you said, their theses are very similar.
I'm interested to know, in all of your time, essentially investing, building businesses, what's been the hardest period, the hardest year, let's say, of those 36?
Well, I mean, there's different ways to answer that. You know, I started my company in 1989 before the internet in a one-room office the size of a closet, writing a newsletter on a word processor, printing it out at a printer, stuffing them in envelopes, buying mailing lists from Doug Casey and Gary North where they'd send you a box full of labels, putting the labels on, stamps on the envelope and sending it out once a quarter. We come from nothing. My father's middle name is Miles. His best friend who lent us $60,000 to start a company and wing on a prayer, his middle name was Franklin. My parents sold their life insurance policies. We were the least likely cast of characters to have ever achieved what we have. But the world was much easier to navigate then. You didn't see chaos at every turn. You would see one or two major newsworthy events every year, and that was a lot. Now you see them every day, so much so that your head spins. And there's so many things that are really turning the entire environment into a hot mess, that I don't know how to answer that question. On one end, it was much harder to start from nothing. You know, I went to college to play baseball. That was my intention. I hurt myself early on, blew out my knee, and started a company with my dad that I knew nothing about. That was hard, but it was an easier time. I remember my father saying, if we just do $14,000 a month, we'll be okay. Well, that was then. It's an environment where I can't even imagine starting a business right now from scratch like we did back then. I didn't know any better then. The world was much easier back then. It cost much less to get along back then. I would tell you that from a standpoint of the world, it's way harder today than it was back then, even though there's far more technology and an opportunity for information and whatnot. But it's always been a challenge. And I think that's kind of what has defined my success, is outworking people, grinding. Now it's easy to reach people, where we had to find people to read our newsletter. And I would start doing public speaking many years after 1989 at conferences to get a few more people to read our newsletter. Now I can come on an interview with a guy like Robert Kiyosaki, it gets 1 million views. And if 1% of those people call, that's 10,000 leads. Or a guy like you, and expand into a new community, which I've been trying to bring these two communities together for the longest time. You know, I'm friends with Mark Moss. I'll be on his show next week. Natalie Burnell, Swan Bitcoin, Black Swan, the XRP guys, and on and on and on. Not because I understand crypto as well as you or they, but I understand that we see the world largely the same way. Now, you could argue the folks who are involved in crypto and in Bitcoin focus, and this is a generalization, more on profit. My crowd really focuses more on preservation. Now, long before you were born and in the United States, there used to be commercials for Reese's peanut butter cups. And it was funny, there would be two people like sitting in or walking down the street, and one would be eating peanut butter with a spoon and the other would be eating a piece of chocolate, and they would bump into each other. You got your peanut butter in my chocolate. You got your chocolate in my peanut butter. How dare you? And then they would both take a bite like, wow, we're better together. And I think that's what I've been trying to do for a long time, is to simply say that being divisive of the two communities is silly. We're far better off together. But that's what the technology has allowed us to do, not only to get to a point where you have cryptocurrency and Bitcoin opportunities, but also the information, to get the information out. It's far easier than it was back then, but the world is much harder now than it was back then. From a standpoint of being a father of 3 kids, my youngest being 18, I think it's far more difficult right now for my own peace of mind when I look at the world in front of me. I know this is a wide divergence from the question that you asked me, but I
No, I
would
like
simply
it. Keep
say
going.
that it's deeper than just being difficult. What is difficult? To me, difficult is trying to navigate in a world that, you look at the United States. Ray Dalio just came out and said 60% of this country has a literacy rate under that of the 6th grade. We are 39 trillion in debt. Everyone knows that. But how about the unfunded liabilities, Medicare, Medicaid, Social Security, government, military pensions, that exceed 170 trillion? So we're 200 trillion in debt. We're uneducated. We don't make much in the way anymore in terms of manufacturing, just in time for AI to exert itself and kneecap white collar jobs and blue collar jobs both. The world is much more difficult now, even though you could argue there's more opportunity in some respects because of the technology. But what happens as the technology broadens? I just simply think that it's never been more important to be a contrarian, to have a macro perspective. I think if you're not a contrarian, you're damn well going to be a victim. And sorry that I really butchered that question, because it's a fair one and it's a good one. I would simply say this. Back then, it was much harder to imagine I'd ever be in a place like this, and the world was much easier. Now it's much easier to get information out, when back then it was very difficult, but the world is much more difficult. So I don't know. I don't know, brother. Just simply to say that these are interesting times, as the Chinese curse goes, may you live in interesting times. You sure as hell ain't the 80s, when it was dull and complacent and boring. It's anything but that now.
Honestly, I really appreciate that answer. Like, you actually answered my second and third question all in the same go. So there's absolutely, and I like divergences. Like, this show isn't just about like what's happening, price action today. Oh my god, like Bitcoin's gone up today or whatever. This is about like the sort of like underlying structural changes that the world is kind of going through, and trying to help people understand that, well, there is an enormous amount going on in the world, and unless you position accordingly, not necessarily today, but with an understanding of what's actually going on, you're just going to be at the behest of continued like hardship, basically. Sorry, just to unpack on some of those things though. Like, I had Peter Schiff on the podcast a few weeks ago, and I had Jeff Booth on the podcast last week, right? And it's so interesting because I really appreciate what you're saying about how these two communities should be closer together, and you've done a great job in actually bringing a lot of conversation between the communities, which I really appreciate personally. Because like Peter Schiff like couldn't be more polarizing, right, in crypto, and Jeff Booth couldn't be more like convinced that Bitcoin's the answer for everything. But both of these guys, their thesis, their understanding of like the core problem is, I don't want to like annoy Peter or annoy Jeff in any way by putting words in their mouth, but essentially they come from the exact same position, that deflation is the natural state of technology, and technology should make things better for people, and it should make things easier for people. But the monetary system does the inverse and makes it harder for people, because it continues to inflate away, continues to debase, and people just get on this treadmill that they can never keep up with. Which is, and the fact they arrive at different solutions, it's completely fine. Like, but the understanding of the core problem is literally identical. And so, yeah, I do appreciate what you're saying there.
And that's exactly right. I mean, you couldn't say it better. With all the technology, things should be getting less and less and less and less expensive. But it's the opposite of that. You're right. My father and I were talking not too long ago. He said, Andy, I married your mother in 1963, the year I graduated college. And he said, my first job out of college, I got paid $5,800 or $5,900 a year. And you know what? Your mom and I could live comfortably on $6,000 a year in 1963. I said, that can't be true, Dad. Come on, man. He said, I swear to you, I look it up. Google says $10,000 a year was the average salary in 1963. Okay, first job out of college, sure. When you talk about how things have gotten so much more expensive in an environment that has gotten so much more advanced, it's to your point, inflation is the insidious debasement or the insidious tax that we don't really witness. We don't notice in real time because it's so gradual, but it's getting to the point where gradual is going to become sudden, the logarithmic decay, little by little by little by little, and bang, all at once. We're getting to that point with an inflationary agenda where the Federal Reserve is trapped. They're trapped between an environment where if they lower rates, as everyone is, the market wants, the Trump wants, you continue to accelerate inflation. They being the Federal Reserve, pivoted from quantitative tightening at 3%, 50% away from their target. That's like playing football, American football, I should say, talking to you, and getting to the 50-yard line and say, good job, let's, we're good. We're all good here at the 50-yard line. We're halfway there. That's not right. And now they're going to accelerate inflation. So if they lower rates and try to address this problem of slowing economy and struggling labor market, they re-accelerate inflation tremendously. They go the other way and let rates go higher. God forbid, that's what the market would say. Why then everything in this leveraged world we live in starts to break. We have $10 trillion in government treasuries that are coming due this year. We only bring in $5 trillion on top of the deficit spending or the deficit we're running. We're in big trouble mathematically. So what do you do? Most governments have chosen inflation. And that's your point. We're monetarily irresponsible. We're fiscally horrendously irresponsible. And that is a problem against a wave of deflationary technology that, it's going to, more so than in prices, is going to, I think, exert itself in labor. And that's the biggest issue. So, yeah, I think it's important. Peter Schiff is one of the smartest guys I know. I listen to much of what he says. I find his borderline antagonizing attitude towards the crypto sphere wrong. I do. I think that it would be better to unite the two communities.
I like him. I like when I chatted to him. It was a nice conversation.
I like him too. I think he's as smart as anyone that there is, and I'm not. I just think he antagonizes this side of the table, and instead, it would make not only people's portfolios stronger to have both. If you believe in a digital form of investment like this, it would make your portfolio stronger to have an analog aspect to it. But not only that, it would make your understanding of monetary history, of economics, stronger as well. And so I just think I've tried for the last 3 years to unite these two communities. And I admittingly don't know enough about crypto to even be halfway literate about it. But I do know enough to know that we see the world mainly in the same way. And like you said, their theses are very similar. So I just think it's better to be tolerant, to be cooperative rather than, divisive.
Yeah, 100%. I couldn't agree more. I actually think like a lot of people in crypto don't understand crypto that well either. So I think you probably actually are doing a pretty good job, to be honest. I've got do you think the artificially low rates are largely the cause of everything deteriorating?
Yes,
or
absolutely.
Do you think that it's like quantitative easing? Or do you think that it's the need for a monetary system, like a fiat-based monetary system, to have to inflate over time?
Well, I mean,
maybe they're all
as the world reserve currency, you have to create money because the world cannot get enough dollars to trade alone. You print money, it creates inflation. I think suppression of interest rates is the problem with everything, because when you suppress interest rates, first of all, interest rates should not be controlled by bankers who have an agenda. They should be controlled, or politicians. They should be controlled by the market. And when you distort interest rates, you create misallocations of resource and capital, and even equally as important, distortions in asset prices. What is a house worth at 3% mortgage, as we saw during the pandemic? What's it worth at a 7%? How about a 10%? Go back to 1980 when inflation got out of control. Paul Volcker raised interest rates to 18.75%. What is a 20% mortgage rate due to a house that was bought at a 3% mortgage rate? The value of that house, the house is the same, but when the cost of money is 7 times higher, what is that house worth? And so when you talk about suppression of interest rates, in my mind, that is the catalyst for everything that we are dealing with now, because asset prices got way out of whack. When you force people into speculation, when you allow people through interest rate suppression, like for example the yen carry trade, and borrow money at zero and then invest it across the globe, and then you are creating distortions in said asset prices. And just as bullish as it is in a environment where you have these low interest rates and push asset prices up much higher, it happens over time. The unwinding is exponentially more severe because everyone does it at once as they freak the heck out and everyone starts to dump, and the unwinding of that levered trade becomes very, very frightening. And I think, manipulation of precious metals is a byproduct of manipulation of interest rates because asset prices got too high. And if you are going to offshore manufacturing, and if you are going to create an environment where you want a perception or an illusion of prosperity, it starts with suppressing of interest rates. Because if you suppress interest rates, that the byproduct of that is much higher real estate prices, much higher equity prices, and much higher bond prices, right? And when it starts to unwind, that's when things get very frightening, because what is real price discovery? That is the one thing that has been missing for a very long time. When you have suppressed interest rates, what is price discovery? And I think that's something that people need to understand. And then when you put it in context with inflation, let's do a little exercise here. In the United States, and I've done this so many times that I'm fairly comfortable with the numbers in terms of being able to do it from memory. In 2001 or 2005, the average price of a house in the United States in middle America was $240,000. And gold was 450. So if you take 240,000 divided by 450, 533 ounces would have bought you a house in 21 years ago in the United States, in middle America. Okay, and you're talking to your wife, honey, what should we do? My father just left me these 533 gold Britannias or gold Maple Leafs or gold Eagles, whatever you want. 533 of them. We could spend them right now and we could have no debt, no mortgage. And she says, I'm pregnant. Let's save these for our kid. Let's put them under the mattress, right? You lift up that mattress now, 21 years later, and that gold has earned nothing but dust, right? So let's look at the picture now. Today, the average price of a house is about $500,000 according to the Census Bureau. So that's a great investment. Your house doubled in dollar terms. Way to go. Nice job. But those 533 ounces times 4 times 4,700, let's call it, well, that's $2.5 million. And that's going to buy you 5 houses now. So even though gold pays no interest, the distortion of asset prices, where you kept interest rates so low for so long that house doubled, no problem in 20 years, great. But the erosion of the value of your purchasing power has accelerated past the distortion in asset prices. And the reason you own gold is because what we are seeing is an accelerating erosion of the purchasing power, regardless of how well your investment is doing in dollar terms. And that's kind of the concept here, is that you own gold not to become wealthy. You own it because it is wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And last point, not only is it performing well, you see the most well-informed traders on the planet for the last 6 years. And I don't even want to talk about they are the most well-funded, the central banks, and now whoever is standing for delivery at a level no one has ever seen for 18 straight months in New York here, billions and billions every month. But these are the most well-informed traders on the planet who are prioritizing going back to this non-interest bearing physical possession of gold over just about anything else. And I don't think we've even begun to see how this all plays out in terms of gold pricing and or when when interest rates find equilibrium with asset prices, to your original question, I don't think we've begun to even imagine what that looks like.